Jamie Dimon is arguably one of the most powerful people in all of finance, being the CEO of JP Morgan Chase, the largest bank in the United States and a systemically important one, has always been an opponent of crypto. In the past, he used to say he was going to fire people for trading or investing in Bitcoin. Then he's come out to the public and saying that he thinks the blockchain is a revolutionary technology. But things aren't just adding up. But now he's being largely accused of flip-flopping as he is attacking major crypto companies and players in the space, like Saylor from MSTR or Strategy, which could face $2.8 billion in outflows and excluded from benchmarks like the MSCI and the NASDAQ 100 under the reign of Jamie Dimon. Then he went on further to attack another major crypto advocate, Jack Mallers, and sent him a letter of his account closure to which he framed. We covered this in the previous video. And what's absolutely hilarious is that you couldn't make it up. The next day, they put out a statement talking about how crypto is viewed as a maturing asset class and how Bitcoin is going to continue to grow. And it almost seems like there's foul play, like he's trying to destroy anyone that could be viewed as competition in the space or the run to accumulate and buy crypto like Bitcoin. And yes, if Bitcoin is harmed, XRP is likely going to feel the pain as well. So we'll be covering all of that news alongside the most recent Hidden Road acquisition and what that means for XRP and Ripple as a company, how XRP just got another spot ETF, and if that's going to affect the price of XRP into the upcoming month, arguably in December, right before the year end. We'll be covering an article on G Treasury, which is a company that Ripple acquired, and how this is going to make waves in the traditional financial world, and whether or not they're going to actually integrate the XRPL into much of these platforms that they've acquired. And finally, I'll be covering a bit of news from Eleanor Tourette, who does play a pretty crucial role in proper reporting in the crypto space, especially when it comes to Washington and any actors that might be involved in passing crypto legislation, in this case, a market structure bill, and when that is set to pass. And always, I'm going to be covering the price action a bit, maybe a bit of those on-chain analytics or futures. So stick around to the end if you want to know some key pivot points you need to look out for this week in order to protect yourselves. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. And the first thing I want to cover is this news surrounding Jamie Dimon, which is such an interesting player in the space. Arguably one of the least trustworthy, considering he always used to attack crypto. Then at some conferences when it involved major players like Larry Fink and BlackRock, or any banking type of events when blockchain and crypto were brought up, he was actually pretty dovish. He actually was in support of it. Matter of fact, they even launched a strategic partnership with Coinbase, a crypto-only company, to make buying crypto easier than ever. So it's obvious they see an opportunity in crypto. Otherwise, they wouldn't offer a partnership, the largest bank in the world, with a crypto-only company like Coinbase. But then he goes ahead and starts making things very difficult for all other actors in the space, which leads me to believe that there is a great conspiracy at play, that he wants to destroy all of the competition. And arguably, it's going to be a lot harder for him to destroy a Coinbase, considering they offer all sorts of crypto products and services, whereas the Bitcoiners, the biggest players, the ones that they want to accumulate the most, they want to destroy. So let's have a listen to what Saylor says on the topic, the CEO of one of the largest, if not the largest, holder as a public company of Bitcoin. And again, if anything were to happen to his holdings or their stock, or they go insolvent for whatever reason, this could cause a collapse like we've never seen before in the entire crypto market. This is extremely important, and arguably to crypto systemically important, in the same way that JP Morgan Chase is systemically important to our current banking infrastructure in the United States.
I just want to ask you about the JP Morgan report that came out this morning, warning that strategy could be excluded from benchmarks like NASDAQ, MSCI, and it could trigger an estimated $2.8 billion in automatic outflows. That's just from the MSCI alone. What's your response to that?
I think it's a bit alarmist. I'm not so sure the numbers are nearly that high. I think actually the numbers would be much smaller. I also think it's already priced into the market by a factor of 10 if you count it. I don't think there's any relationship between the decision making of MSCI and the NASDAQ 100 or the S&P 500 index allocators. The company is an operating company. It's just like insurance companies use capital in order to create financial products, and banks use capital to create financial products. We use capital to create digital credit finance products. It's possible there are people in the world that don't fully appreciate digital credit or digital treasuries. That wouldn't surprise me. We had that challenge with bankers that didn't want to bank Bitcoin. We had that challenge with accountants that were a little bit skeptical of digital assets accounting. The accountants embraced the asset, the bankers embraced the asset, the politicians embraced the asset. We had the challenge with credit rating agencies, and they just embraced the asset. We're starting to get credit ratings. We have the challenge under the Basel Accords, where Basel Accords allocate zero value to Bitcoin, and now they've announced they're going to reconsider that. So I'm not concerned that we have these kind of concerns.
Now, in all fairness, if you are Michael Saylor as the CEO, you're trying to keep people from being too concerned, creating panic or fear, state it's not that big of a deal. And maybe he's right in some situations or circumstances. However, it did really hurt the stock. And I think that's exactly what JP Morgan Chase wanted to do. And we really don't know who these major bankers are in talks with or what potential risks might be associated with them doing such a thing. However, this month, JP Morgan Chase issued a research note warning that MicroStrategy, now rebranded as Strategy, faces potential exclusion from major equity indices because of their heavy Bitcoin holdings. So even putting out a statement like that, they knew exactly what would occur. It would cause a sell-off, which sparked a sharp sell-off in the MSTR stock. Now, that might not matter for Bitcoin as a spot asset. However, when they hold so much of Bitcoin as a stock, or I mean as a spot underlying asset, if the price of their stock dumps too much and they hold too much debt, they are going to have to sell Bitcoin in order to repay, which will cause a major crash in the crypto market. Maybe this is an inside job. Maybe they have some ill-willed intentions. We'll never probably fully know until years later if something like that did occur. But either way, MSTR stock dumped almost 40% in a month, down 68% from its all-time high, which, by the way, we really have to think about that. The only thing they really hold is basically debt in Bitcoin, whereas Bitcoin has not even dumped 68% from its high. And if it had, I'd be buying like a madman. I'd be buying most cryptos that I like a madman, including XRP, if Bitcoin was down 68%. To make matters even worse, it's like they're toying with the market. And yes, they probably have a bit of pull to be able to do so, considering everyone reported on the 25th of November, just a day ago, that $5 trillion JP Morgan says crypto is emerging as a tradable macro asset, and that they expected Bitcoin to potentially reach 240K long term, which I think it likely will happen in the next cycle, not this cycle, this time around at this moment in time, amid its current trade around $87,000. And so they're giving all of these high price targets, confusing the market while attacking companies like Strategy and even Jack Mallers, CEO of Strike, a crypto company. And one could argue, well, how do you know they're attacking them? Well, we don't fully know, and I'm not going to make that direct statement, but it sure as heck feels like it when they're putting out reports they know dang well are going to harm the stock of a company that holds so much crypto. Either way, we know one thing is true. Whether or not we get more ebbs and flows in the markets, whether or not we experience another roller coaster or major volatility, major downside through the end of the year, whatever the case may be, one thing is sure, we are bound to get market structure as a legislation. In other words, this bill is likely going to pass, and she got wind of the fact that it might pass on December 8th. She then went out to reach out to Senator Tim Scott, who is involved in this market structure bill. And now it is confirmed that John Boozman, Senate AG chair, said he wants to mark up this committee's text in early December. In other words, a bipartisan bill they all agree upon and can sign off by December 8th. So it's possible markups could land in the week of the 15th before members leave for Christmas, which would be awesome and give us an insane start to the year. And I'm not saying it's all going to happen at once. Everyone always says that, but I do believe that this is going to provide enough confidence for major institutions to truly start entering the world of crypto in many ways that they haven't been able to in the past or felt comfortable to in the past, especially when we're talking about client money and saving their butts in the case some issues occur with crypto. And think about over the last decade, how many issues we've experienced with crypto when it comes to bad actors, when it comes to overregulation or attacks from the government. But what if all of those things are off the table? You're going to have a truly positive environment for innovation in a way like we've never seen before. So 2026, even if we don't get a strong start to the year or a strong summer, is likely shaping up to be the start to a new bull market, so to speak. And this would play perfectly into the fact that we have yet another ETF, the third of this month for XRP, under the ticker GXRP with Grayscale, which did launch it just a few days ago, and will now put probably the full force of their sales team to get on calls, to reach out to their clients and to say, hey, we are now offering XRP with 0% fees from Grayscale, which is the world's largest crypto-focused asset manager. Now, there are larger asset managers, but this is the only one that is very crypto-focused. So they are going to double down on an ETF like this, which then begs the question, why hasn't things shown up in the price? And that's just because we are currently in a weak or a shaky macro environment. No one wants to buy more risk on assets that are more volatile than most assets like crypto in an environment where they're not too sure what's going to happen with the global economy. And right now, from the TradFi markets, things have been looking a little shaky. So I do believe this is going to provide us a lot of support into the long term and build us a very strong, long base. But it is possible we continue to sell off. So even good news and a negative environment is not enough to shrug the trend. And we have to remember one thing about markets and investing is that the trend is your friend. Dow theory is one of the best theories to adopt when you enter markets. Now, here's what makes this even better. Most cryptos like XRP do not have the support of a company like Ripple. And Ripple has made some extremely smart decisions this last year and arguably over the last couple years to acquire major companies that are already serving the world of corporate finance and traditional financial markets. And all they have to do is upgrade that infrastructure using the blockchain technologies and the team that they have that built out the XRPL or has improved it over the years. And that would include all sorts of products like integrating their RLUSD stablecoin, integrating the XRPL with XRP as the backbone for fees. And now, last month, Ripple completed their acquisition of Hidden Road, something that we've already covered extensively on the channel, which they rebranded into Ripple Prime, and they serve 300 institutional customers, clearing $3 trillion across all markets annually. So even if they got a portion of this $3 trillion and continue to grow that business because they are far more effective, efficient, transparent, affordable, 24/7, 365 clearing in a matter of seconds using blockchain technology and potentially even the XRPL. And again, not all of their business is going to be on the XRPL because not all things will require it. But at the end of the day, I do expect this business to grow just because it is better. And again, technology always moves to the next best thing. There is no stagnant business in an expanding world of technology. Ripple is now the first crypto native company to own a global multi-asset prime broker. And over again, we've pointed out and seen that the RLUSD stablecoin is consistently growing in market cap. This last year, XRP grew like crazy in market cap and now will be used as collateral for institutional clients. So maybe some of these institutional clients might be incentivized to hold the XRP token or the RLUSD token for extra incentives to use Hidden Road. Imagine if they created an environment where they incentivized their major clients to buy and hold these assets or use these assets, which would give them a discount in doing business with them. That would be truly brilliant. And I think they're thinking that far into the future for some sort of a creative way to integrate these products into the platform, not scare away their current clients, which might be used to old infrastructure, the old way of doing things, to adopt new technologies that are better for them and help the price of XRP go up. I think that's really the game plan. And they spent so many billions of dollars acquiring so many companies, which would also include this post from Wrath Economy, another really great person to follow if you want true Ripple or XRP based news that's not just a bunch of hype or fake news or things that are not really verified. You can't find any truly verifiable sources other than some random hype poster on Twitter or X. He states that this document by Ripple's other acquired company, G Treasury, is worth your time to understand the perspectives and nomenclature of corporate finance. So I actually went ahead and pulled it up. And they talk about how if you're a chief financial officer or a treasurer of a company, you've heard about blockchain over and over and over again, but why should you care? Maybe you have a lot of questions. Well, we'll explain to you why you should care and why you should be using this stuff. And the reason that you should listen to Ripple and G Treasury is because they spent so many years building and operating digital payment infrastructure for 300 financial institutions globally. This can improve your liquidity management, reduce your costs, and prepare your organization for the future, which is all blockchain. They explain what blockchain is for. They explain how stablecoins work and why they are better and more efficient. Stuff that we already know and again have covered on the channel. But here's where it gets cool. When it comes to cross-border payments and optimization, you could use a stablecoin or a blockchain-based payment rail to settle in minutes instead of days, reduce your cost by 60 to 90%. Think about the margins on that when you're moving so many millions or billions of dollars. Who in their right mind wouldn't do that? And by the way, if you ignore it as a CFO or a treasurer, it's likely at some point in time you're going to get fired for having ignored it, which means if you can't beat it, you have to join it. Who are you going to use? Well, you're going to use the biggest player, the one that has a proven track record, and of course, the only company that has as much licenses in the crypto space as Ripple. It's almost a no-brainer, which ultimately will help push the price of XRP, hopefully for new all-time highs. If not by the end of this year, it's probably going to happen sometime end of 2026 into the end of the next bull market cycle, which we don't know when it's going to occur. But as the month starts to come to a close, it's going to be more and more difficult for me to see a way or a path forward in which we hit new all-time highs, essentially overnight. So let's have a look at the charts super quick to see what we think is going to occur over the next couple of days and arguably the next week. Since the all-time high back here in October 6th of this year on Bitcoin, and I'll go ahead and just look at that solely, you can see that we've put in a series of lower highs and lower lows for a downtrend. Okay, and we've circled these over and over and over again, and I get a lot of people might say, well, that's not great technical analysis. You hear it all the time. These are people that don't actually know technical analysis. By the way, all indicators is a derivative of price. In other words, they are taking the price, using a few calculations to point out or plot out something on a chart, but at the end of the day, the most important thing is the price. So why use a derivative when you can just use the real thing? Sometimes people just don't know how to look at a chart, and I'm not, bashing these people, but just because you see a bunch of fancy indicators that point in one direction doesn't mean it's true. All models are right until they're wrong, and I found most models are wrong, including most ways at looking at charts. So the one thing I do apply constantly is Dow theory, which is a trend. Is the trend up or down? The trend is your friend, and right now it is down. How do we know? We broke below a key range of support right here between 108 down to like $105,000, which acted as a resistance back in 2024 when we hit all-time highs. Then it acted as a resistance right here where we continue to bounce in this range before breaking out and being supported. Since this point in time, we put in a series of what? Lower highs and lower lows for a downtrend. This is our major range low now, and it's very much possible that we get some sort of a retrace back up to probably our prior range support right here between $100,000 down to like $97,000, $98,000. So if that were to occur on, let's say, a Bitcoin, even with all of this weird crap going on with JP Morgan Chase, I don't even think JP Morgan Chase is enough to push the price too far down or too far up without some sort of a bounce or a retrace. So yes, I do believe we're going to get a retrace through the rest of this week, considering we are about a day away from Thanksgiving. And this thing is still trending to the upside. I think we'll continue to trend to the upside through the end of the week, potentially into the weekend, before looking for a sell-off back in these ranges. And by the way, if that occurs on Bitcoin, you can see just how correlated a lot of these markets are. XRP, similar fashion, broke below its range support right here and has remained below the support, consistently putting in lower lows and lower highs. And now we have another range low right here where Bitcoin also dumped. And now you'll notice it's actually pumped a little bit harder than XRP off those lows in terms of a percentage, but that's because it's a far smaller market. It's easier to push the price up of a smaller market than a larger market. It requires less money or buying power. So that said, this is still a technical downtrend. And if I were to take and put, let's say, a resistance line here, you can see that this has acted as a pretty strong support in that 222 to 225 range, or even arguably 220 range, which might become a resistance. But because Bitcoin still probably has room to move to the upside, I could see, and you'll notice how we go back here, it acted as a resistance almost textbook wise right here in June and yet again in July before it broke out for all-time highs. I do expect this thing to continue to trend and range with Bitcoin all the way up to potentially even 250 before I think we could see a steeper sell-off. Now, if this is the bottom, we do need to see the price of XRP break above $2.70. If it can get above 270 and stay there on a weekly time frame, that would lead me to buy into strength or be far more bullish. But as things stand, this looks more like a retrace in a general bear trend, which leads me to believe that the bear market has started early compared to most years. I don't believe this year is similar to all of the other major years where we've experienced blow off tops and money rotating out of Bitcoin into altcoins. And all these theories are always tossed around on social media and online, but I don't see that to be true this time around, because if it was, this October and November would have been extremely strong. We would see the top sometime mid-December. We are not seeing that right now, and I really struggle to see an environment even with all the ETF launches. Look at this. If we truly had a positive environment, these ETF launches should have had us back up to prior all-time highs or even into new all-time high territory. So if the ETFs aren't enough to save this thing, if a market structure bill on December 15th is not enough to save this thing, I think we've started a new bear trend, and I will not fight the trend. The trend is my friend, which means I'm looking for short opportunities, which is why I think you should take advantage of opportunities where you can use other people's money to trade and risk only a fraction of the capital that you are trading. For example, you can risk up to literally 1% of all of your capital to trade with a $100,000 account and keep up to 90% of the profits. And here's exactly how you would do that this bear market to create income for yourself so you can actually invest in the cryptos during the bear market and make a boatload of money into the next bull market. Let's have a listen.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test, and you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund, and one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with 6 figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000, because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click start trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout. And if you skip it, you're leaving 10% on the table forever. So it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.
So go ahead and click that link down in the description below to create your account, get funded, and get trading today. And that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel, and also actually check out altcoinpro.com if you're wanting more out of crypto, whether it's tools, training, resources, education, or access to literally the best of the best in all of crypto when it comes to experts. Until next time, we'll see you in the next video. Goodbye.